Welcome to FXcast, and this is our FXcast market analysis for Monday, May 16, 2011. In each of our videos, we focus on high probability trading setups, we evaluate the gold chart, we try to come up with a low volatility watch list that gets updated, we create an inside bar watch list, look at the economic calendar, see what could affect our open trades, and an education spotlight at the end. With that said, let's begin. We are going to start off with the gold chart as we look at the daily and the hourly. And what we see is the pullback of gold. This could be tied in. We've been talking about the weakening of the euro with the Greek debt crisis, and we're talking about the strengthening of the dollar with QE2 coming to an end next month. So maybe the flight to gold might be, tempering off a little bit. You can see our lovely uptrend, and it's still valid and it's still holding up, so that's fine. And you can kind of see our two points of interest going long above here and then short above here, but more importantly, it's going to be sort of an ascending wedge. So really, you want to trade to the downside when it breaks below this, which is really the 50 moving average and above here. And we can see as we drag over the market profile, you can see where the volume is around 1503. So, we may struggle to go higher. The flight to gold may continue, or it could be ending. What I would do is sit on hands and let a trend, let a pattern develop, and then be a high probability trader by trading that trend. Now, when we compare gold to the pound dollar, we can see that the pound dollar is coming back into this big consolidation range. If I grab my little horizontal trend line here, you can see this big range that we're back in. So there's certainly a lot of arguments that the pound dollar may be heading down here to the 200 by the time it gets down there. Certainly oversold, certainly showing some weakness. But if you haven't been in this one already, and we did talk about this, I would sit on hands or at least look at a safe way to trade to the bottom, but we may have already missed that. We'll look at the hourly in a second. The Aussie dollar, very similar pattern as with gold, very similar patterns. And this one's also sitting at the 50 moving average. You can see one pattern we traded as it broke here. Now it's sitting at a support price level. We got some wicks below us. We've got the 50 below us. We've got a downtrend line if you want to draw that. It's another one that I would sit on hands and let the pattern play out before trading. You could also kind of say that there's an M pattern right here that could be traded, but I would sit on hands for the moment and see what happens at the 50 moving average. And the euro dollar, weaker than gold, already has broken the 50 moving average and looks like it wants to go down to the 200 also. Grab out our little tool here. We can see our next point of interest here as far as what's going to happen here at 1.430. What happens here? Will we bounce back up? Are we going to continue to push lower? Definitely some weakness again with some of the renewed Greek debt crisis. Now, when we bring in the hourly chart, let's switch this over. Check my indicator list here. We'll get rid of the Bollinger Bands. Oops. For a second. And we can see, let's drag it over, there we go. We can see we're below the last volume support resistance, so there's definitely some weakness there. Again, what I would focus in on is what's going to happen here at 1.4033. When I switch over with the Aussie, we can see the same thing. Definitely some weakness. Even our hourly are showing us the same thing that our daily did, which is sit on hands until a pattern plays itself out. We have three setups that we're going to look at. The first one is the euro pound, and although we're in a clear uptrend, We have sort of a head and shoulders pattern going on here, depending on how you want to look at it. And we can define the neckline right around here. So shoulder, head, shoulder. And it looks like, we had some. Now we pull back. A lot of times after we break the neckline, we come back and test it again. So then we have a falling three pattern on this side, also a hammer, as we tested the 50. So we want to see if this is going to continue to move lower. Now you have one entry right at the falling three pattern, which is at 8688. You have another entry a little bit lower, which is at 8667, and that matches up with this swing high. And then once we get from there, we're probably coming down to 200 moving average. Places to put stops. Well, I would say the open of Friday's first place. So there's one at 8742. It's certainly aggressive. And then if you wait for this entry, I would go with half this candle to be my stop. And again, our targets are going to be here, probably here, and then the 200 moving average. Now when we look at our market profile, we can see where we are now is definitely some higher volume. When we look at our second, what we consider a little bit safer entry of 8685, we can see that gets us down here. And so if we can get below this will allow us to get into the low volume area and we can move a little bit better. But there is a little light volume bubble in here between, I would say, 87 down to about 86. So there's 86.90. So there is a little bubble in there that you can take advantage of. But there is another high volume at the 86.85 price level, and then we can probably move lower from there. So that's our first setup. The next we want to look at is a continuation of what we've been watching before, and that is the dollar franc. The dollar franc, what we were playing was this move back to the 50 moving average. We got a nice rising three pattern 2 times here. We traded that. We're trading this. And so now we're looking for either another pullback and then move higher to keep this, trend going, or it may continue going straight up. So we definitely want to make sure we're pulling back out of the trade around the 50 moving average, and we can see that it looks strong on the hourly chart also. So that's what we're looking for. I do think there's still, although aggressive, entry above Friday's high, and again, the quick target on that is going to be 50 pips or so up to the 50 moving average. The last one we're going to look at is the pound franc. And this one, we see our clear downtrend. And this one also has the possibility of running up to the 50 moving average. Now what we should see here on our market profile on the hourly is the huge volume, and that's where our point of control is, up here at 1499, 14,500. So that's one place to look at your entry. Some people might try to do an aggressive entry, but if you do that aggressive entry where we are now, at 60, 14460, you have to have a first target up into here and let some off, because it's very possible that this could come up as resistance again. But if we break this, then we're going to move right on up to the 50 moving average. For our low volatility watch list as we go into Monday's session, we don't have any, but again, check back with us. We will update that through our services. On the Inside Bar watch list, we got the New Zealand Canadian, and we also have the pound franc. Again, the key about the Inside Bar is trading the break of the high or low of that Inside Bar. Let's go take a look at the economic calendar. As we pull up the calendar, we see a couple things. We have machine orders. This is basically private sector purchasing, excluding ships, the big things. So we're seeing the strength of the Japanese businesses. We also have some inflation data for Japan coming out for Sunday. And then finally, we have the Aussie home loans, again, showing the strength of the consumer. Are they buying? Are they renting homes? All those come out on Sunday. Now, going into Monday, we have the Empire State Manufacturing, again, showing what the businesses in the United States are doing. Are they purchasing? And then we also have a housing market index showing the strength of the home builders. And down at the bottom, we have minutes for the Aussie meeting minutes. Again, this could show a little bit about interest rates, showing a little bit about the economy. And the minutes, may have some language change that could affect the Aussie currency pair. In our education spotlight this week, we're going to talk about the roadblocks that dominate a trader's mindset. What stops you from being at peace when you're making your trades? What stops you from being calm and collective and making educated decisions? What stops you from being a successful trader? And so today we're going to share two. The first one is the fear of uncertainty. And this is what causes your hesitation. You see the setup, you see it developing, and yet you hesitate. You don't take the trade, and then after you hesitate, it's now 10 cents or 10 pips away, and then you doubt yourself because it's moved away. And now some people after hesitating chase, some people after hesitating just say they missed out, and they don't end up trading the whole day because they hesitated time and time and time again. And that kind of ties in with the fear of loss. You hesitate, because you're worried about losing on a trade. You don't pull the trigger. That uncertainty of whether you're going to make money or not, more importantly, the uncertainty of maybe you will lose money, causes you to hesitate, not pull the trigger. And we understand that when high probability trading is about having a system that's back tested, that is proven, so that you can have a positive expectancy. So there's no reason to hesitate, and there's no reason to pull the trigger, because we know over time, over a pool of trades, we're going to have more winners than losers, and those winners are going to make more money than our losers. Thanks, guys, and I'll see you tomorrow.